And now we move on to our first panel discussion of the day, the topic of which will be payment infrastructure in the 21st century. I'm pleased to welcome renowned payments expert Mr. Mark Munne on our virtual stage as the chair of this discussion. Mark is partner and independent payments consultant at iPlan and for over a decade has been helping companies to do more with payments, especially instant payments. Mark, I'll leave it up to you to introduce the members of your panel.
Thank you very much, and good morning or good afternoon if you're in a different time zone. To all of our listeners, thank you for joining this session. The topic for the next 40 minutes is indeed going to be payments infrastructures in the 21st century. We're going to talk about opportunities and experiences. And it's going to be a very, very interesting session. There is a chat box available in this session, so to all the listeners, you are able to ask questions. These will be directed towards the panelists, so I'll keep my eye on those. And in the panel, I would like to take three different approaches or three different angles to the topic. I want to take a look at the users of payment infrastructures. I want to take a look at the technology side, and certainly, not least, also at the regulatory side. But first, I'll give the panelists a chance to introduce themselves, their position, the company that they're working for, and how they came to come on a panel on payments infrastructures. Unfortunately, the only woman on the panel, I would like to ask Ms. Atawodi, Ebi, to kick off.
Hi, my name's Ebi Atawodi. I'm the head of product for payments at Uber. Ladies first, right?
Super, super. Paul, you would like to go next?
Yeah, I'm Paul Walvik-Joynt. I am from Payments International at Nets, and we operate instant payments infrastructure and deliver that to clients in Slovenia, Hungary, Italy, Norway, and Denmark. And that's probably why I'm on the panel of infrastructures into the 21st century, which is really exciting subject.
Super, super. Looking forward to an interesting debate. Mr. Gupta, Navin, you'd like to do a quick introduction?
Absolutely. Happy to go next. I'm Navin Gupta. I'm Managing Director for Ripple, and I manage MENA, which is one of the largest cross-border payment sending region all over the world, and also look after South Asia, which is one of the largest receiving region. And as you know, Ripple is an enterprise blockchain company, and we are here to make cross-border payments simple and easy, like sending an email from person A to person B.
Super, super. And last but certainly not least, Mr. Bartha, Lajos, care to do a quick introduction?
Yes, thank you, Mark. Good morning, everyone. My name is Lajos Bartha, and I am an executive director in the Central Bank of Hungary. I spent my last 22 years in the central banking area, 19 years in the Central Bank of Hungary, and 3 years in the European Central Bank. But all these 22 years went on payment systems and payment services. Currently, I am heading the Financial Infrastructures Directorate of the Central Bank and the banking operation area of the Central Bank. So I am responsible basically for the regulation, supervision, oversight, development, and operation of payment systems and payment services in Hungary.
Wow, well, good to have you on the panel. Well, let's start with the first angle, so the user angle. So being a major user of payments infrastructures across the globe, we see a trend to increase speed in transactions between banks through instant payments, as well on the way in Europe, in Asia, in the US. More recently, we've seen developments in what I would like to call the other areas of the four-corner model, so in the overlay services and in the interaction between the users and their banks. as a major user on payments infrastructures, Uber, what do you see as the main areas of improvements in the payments areas that are coming in the next couple of years?
So I think to answer that question, let's take a bit of a step back, walk you a little bit on the journey that we've seen within Uber. So when I joined Uber, and for quite some time, it was this vision of push a button, get a ride. So you went all around the world, whether you were in Delhi or you were in Dallas, right? You pushed the button, car showed up. And we were really trying to make it so that you, just like your car, you just walked out. So payments, for one of the first times, if not, probably one of the first sort of use cases, became an afterthought. You could walk out of the car, you had your card on file, credit card or debit card, or PayPal, and it worked. And then we started to go on this vision of really rapidly expanding across the world. And we had a very rude awakening. We found out that, payments, it might sound quite simple and seamless, but it's as nuanced as the countries that we were in. It's as nuanced as the cities that we saw. And so you have everything from markets where there's two-factor authentication. So now I have to interact with the customer. You have markets where it's single message transactions are really the order of the day, or wallets. So you have to think about, okay, what's the fare? I don't know where the customer's going. So how do I manage a situation where you have low balances, or they haven't gone through an auth flow, or the sort of authentication has changed? And so as we sort of scaled globally, we started to really think about, we've distilled payments, gone away from this rider-driver methodology, and really just started to think about spenders and earners. And so spenders, they pay for services, earners, they offer services on the platform and get paid. And we have this multi-sided marketplace. Like you could be a rider or an eater, grocery shopper, or you could be a restaurant, you could be a transit agency, or a driver, a courier. And we started to really think about both sides of this. And at the end of it, it really comes down to this simple philosophy of, I want to pay and get paid the way I want. I want it to be as seamless as possible. So this might sound crazy, but as we think about payment acceptance, my team really thinks about, how do we cover 100% of the top 3 payment methods in every market? And I'm pleased to say that we're pretty much almost there. By the end of H1, we'll be at 100% globally, which is it's not it's pretty, there are a lot of war stories to talk about there. But when I look at it, and I look at again, going back to where we were, we couldn't cover that long tail of payment methods very quickly. So we launched Cash. And what Cash did was it was this, normalization, if you like, democratization, if you like, of payments on a digital platform. Everywhere you went in the world, it worked pretty much the same. And so when you ask me sort of what's the future, my sort of dream is digital payments works globally in every market, just like Cash. It is the same, right? There are no weird nuances. There are no compliant regulations that are changing every day. There are no, stacks that we have to keep up with. Let's just simplify it, because the essence of it is we want to exchange value. So to now unpack that related to what you asked, I imagine a world where indeed, when I integrate a payment method, hopefully somehow, all the payment options that are out there somehow work quite similarly, right? The APIs are pretty much the same. The interactions with your bank are the same. I don't need to hop through multiple parties just to get money from your bank account. It just works. So to answer the question, I know it sounds crazy in sort of payments infrastructure. Let's look to Cash, learn from Cash, learn from how simple this thing is, how it just works everywhere, and take that into payments and think about all these different layers, from the infrastructure, the stack, the onboarding, right? The experience when you're using it. And most importantly, more and more, the compliance and regulation, keeping the intent, but not trying to really create nuances in every single market, which means that payment providers might struggle to innovate quickly because we're just keeping up with regulations, even though the intent's good.
Wow, that is indeed a high benchmark to set, I guess. We'll come to the regulatory angle in a minute. But I'd like to basically ask Paul now. So hearing this, Uber wants their payments to be invisible. They want their payments to be harmonized, having the same payment experience across different countries. You're an international company. You've got systems in Denmark, in Norway, here in Hungary. So you have some experience in having that international landscape. On the same time, if you look at Net specifically, there's been a lot of things going on. You've got P27 in the Nordics, which is a major overhaul of all the payments infrastructure over there, and you've become part of the MasterCard family, if you will. So how do you address those desires from Uber while also managing all that turmoil that's happening inside your company? How do you balance that, and how do you prioritize what you need to do?
Well, first of all, there's not too much turmoil inside the company. We're just having lots of fun doing what we do best, and that's namely instant payments. So, but certainly there's a lot of interesting things going on, and Ebi, I'm really pleased that you're thinking along the same lines as what we have been thinking when we are designing the backbone infrastructures. So from the outset, we have been working diligently on removing friction wherever we can. So in terms of establishing infrastructures, it's about onboarding, it's about API access, it's about processing, it's about ensuring that everything you can do simpler with less friction, you will with instant payments. And I'm as excited about instant payments completing it towards cash as you know. I've participated in 3 events in the last 3 years in Hungary, and I think the central bank will also cover some of those elements. But instant payments is essentially about an instrument that is the same as cash, but it's digital. That is the vision that you want to get to, right? So that's what we're working very diligently about. But I think that there's a couple of things that are important in reaching that vision, and that's collaboration and partnering up. And what we do is we provide infrastructures, but we need partners to work together with us, and we work with clients and other partners. We've just partnered up with a company, Fabric, who delivers wallets and delivers integration towards merchants and those type of things. And what you have to do is you have to be constantly collaborating and looking out for partnering up to remove friction in wherever you have your installation going. So when we're in Hungary, we learn from what happens in Slovenia, we learn from what happens in the Nordics, and you apply that. And that's really the essence of it. And I think we're coming back to the regulatory aspects of it, but that's the end goal, to ensure that anything that you do with instant payments is as easy as it were 10, 15 years ago to do cash, but it's digitally native, right? So anyone who is digitally native today will work with instant payments just as easily as we did with cash 20 years ago when I went to the store and bought candy with my allowance on a Saturday, right? So the digitally native people, and also the people that include my generation and my parents' generation, have to transition into becoming digitally native and using the instant payments as we used to use cash. And when we're all working together to do that, that's when we'll reach the level that you're looking for, Ebi. And it's going to be an interesting journey, and we're going to work together, right? Infrastructure providers, Uber, Ripple, we're all going to work together on making this happen. But I think the vision of instant payments being cash substitution is excellent, and it's a real cultural driver for change.
Well, thank you, indeed. You've already mentioned Ripple, so let's move to Mr. Gupta, Navin.
Thank you very much for that, Mark. And I think both hearing Ebi and Paul, and I want to make 2 points, and this will be helpful. So as you know, at Ripple, we are a tech company where we have built a blockchain-based product which essentially connects 2 financial institutions and in turn all their customers together, right? And the way I think about it would be today we don't talk about transfer of data. So for example, Mark has an email, Ebi has an email, Paul has an email, and we don't talk about, hey, you know what? Will you be able to send me an email in this country? Or will you be able to send me an email when we are sitting next to each other? We just assume if you are able to type my Navin at my email address, the email just goes, right? Irrespective of the distance between the two. So that is the nirvana moment we see, which we define as Internet of Value, when money is at that place where Mark's legit money, he's able to move across the world in an instant to any other store of value, exactly the way he does in terms of his data. So his data is stored on his phone and he's able to transfer on a WhatsApp to Navin instantly the way he would want to. And for this to happen, the way we are thinking about it would be, there are 3 layers or elements to it. So the first layer is the tech stack needs to be there. So we are changing the plumbing, which has been built 50 years ago, batch-based, which takes 3 to 5 days for cross-border payments to happen, very high amount of friction and low on transparency, to something that is instant, no friction, and which essentially gives you pre-validation even before the payment goes through. So the tech stack needs to work, right? That we have already figured it out, and we know it works at scale, and a lot of institutions are using it. But the second part is building the ecosystem, and that's what Paul referred, right? To say, hey, you know what, you need to have enough people subscribing to the phone line or having need for an email so that we are able to transact between each other. And there will be 100 institutions, 500 institutions. As the number of institutions grow, then these institutions have a step change effect on each other as each one of them join. And then the third bit in there is interoperability. And I think this is something that is not talked about, but we should. So we don't think of new networks in isolation versus a traditional network. But what we believe is that new networks should be able to connect into old networks. So yes, legacy networks will require some kind of jerry-rigging like it happened in the internet world. The EDI world, which used to be pre-internet, should be able to connect with the internet world through some, of course, change, but the data should be transferable from one to another. Similarly, the world that we see is a MasterCard or a Visa network or a check network or a ACH network should be fully compatible with the new blockchain networks that we are building. And hence, we use an open source protocol called as Interledger protocol, but there are a couple of others as well. And one of these protocols, like for internet, it's TCP/IP, needs to be there, which essentially becomes the standard for the networks to become interoperable. And this is quite key. So that's one side in terms of the stacks that we think about in terms of these 3 layers. The second part that we think about, which is less talked about in payments, but very important, is liquidity, right? So yes, payments is a mean of transferring the data, but underneath it, the liquidity needs to follow. We need to make sure Mark has good funds to pay into Uber. That's the only way the value will get transferred from ledger A to ledger B. And for that, what we do is we use open source digital asset called as XRP, which gets traded 24/7, 365 days a year in most countries around the world, which allows us to convert, say, for example, GBP into XRP or Kenyan shilling into XRP or Philippines peso into XRP, and then give it to Uber in its own currency by converting in a 24/7 exchange in the country where Uber is resident. And that essentially allows us to use XRP as a bridge, for example, in our stack, and to be able to move value from point A to point B instantly and make sure that the finality of the payment is there. Because the payment itself is no good if Ebi after an hour realizes, hey, you know what, that was a fraud, or that payment was wrong and the value never got transferred, but I still was able to give free ride to a person X. Right? So we think about both these things. We think about building the technology stack and making sure that the liquidity is there in the send markets and the receive markets so that the value can actually be transferred from point A to point B.
Yeah. I understand the technology layer. So I'm pretty confident that we're able to get an ISO 20022 message from an ACH into the Ripple network and out the other end into the ACH. I'm a bit more concerned about the second bit. So actually achieving finality over that payment that starts somewhere in a card, goes through the Ripple network, and ends up on a bank account somewhere. So the central bank, Lajos, we see all this happening. So you have a challenge to, on the one side, achieving that security, that transparency, while accelerating, or not, at least not stifling, the innovation that's happening in this space. So how do you manage that balance?
Let's go one step back. So in the last hundreds of years, the central banks were responsible for keeping the confidence of the public in the banknotes or in the cash. In the last five, 6 decades, the central bank is responsible also for keeping the confidence in the electronic means of payments. And with these new instruments which are coming, so from the bank card, we know we are going to the mobile wallets and the blockchain and a lot of new technology, we still have the main responsibility to keep this confidence, because an average citizen doesn't understand what is going in the background. So we understand here, 4 of us or 5 of us, but most of the people do not understand what is coming. And a few years ago, when the PSD2 in Europe started to roll out and the instant payment system started to emerge, I didn't think that we will have a lot of work, what I see today. So I already mentioned that the central bankers, and especially those central banks which are integrated like the Hungarian central bank, where the supervision and the central banking functionality is merged, we have a lot of roles. I already mentioned we are supervisors. We supervise the payment instruments, for instance. We oversee the payment infrastructures. We try to develop the Hungarian payment sector. And we are also regulators, so we can issue regulations in Hungary, and we did it. So sometimes these kind of roles conflict with each other. And I think that in the last couple of years, these two phenomena, the PSD2 and the instant payments, which are triggering the changes in the European landscape and maybe in other countries as well. In the PSD2, what I have seen that the competition and the level playing field issue is somehow not harmonized. I am listening to the old traditional players complaining on the level playing field that the newcomers do not have to comply with a lot of rules, and the newcomers are complaining that the old traditional players are trying to keeping the status quo, and they don't allow the newcomers to work smoothly. So this is an interesting discussion between the two different parts of the market. And I see as also responsible for the licensing of the newcomers that they are not used to this kind of rigorous procedures. You know, when they came to the Hungarian Central Bank and they gave us all the necessary documentations, it was not always perfect. So they needed a lot of help from the regulator and licensing authority side to make this live. So it was not so easy for them. And the old traditional players, I call the banks, which are the payment service providers traditionally, and they are the old traditional players. Of course, they have a business line in the payments, and they try to keep this business line. And we have heard how TransferWise, how Revolut, how Ripple, or other PayPal, they destroy the old business lines of the players. And therefore, I see, for instance, currently one major issue in this PSD2 regime, which is the open banking. So I see how difficult is open banking today in Hungary, and maybe it is true for Europe. So I see that the newcomers who are legally allowed to come to the market, they cannot come to the market because either technologically or administratively, they see a lot of impediments. So this is our role. I think that we have to try to find a nice, fair trade-off between the interest of the old players and the new players, because this will make the market vivid, and this will bring in the end a lot of benefit for the end users. And this is what a a good central bank can do. So, for instance, what we have done, that we introduced or we pushed Hungarian banking sector to move into the instant payment field, and we also allowed the new players to come directly to the Hungarian central bank and to the instant payment scheme in Hungary.
Yeah, I've learned that. That's indeed very, very interesting. So looking at that technology side, I've heard Lajos say at the start that from a technology perspective, the five of us probably understand what's happening in all this space, but the actual end user is not. So, Navin, how difficult has it been for Ripple to basically explain their model and their potential value from a technology perspective to the end users? Do you need to, or how is that conversation going?
Yeah. So I would think about two sides. So one is the end user is anyway happy, right? So let's assume today Mark is getting underserved, where either Mark or Mark's business today takes 3 to 5 days for your money to reach the beneficiary on the other side, or a lot of time your payments fail because they can't be pre-validated, or you have no transparency in terms of the FX rate or the final amount that will be delivered to the beneficiary. And the moment I tell you, hey, now this will be available to you, Mark says, wow, where do I sign? And that's what we have seen. We have seen a lot of institutions who are joining Ripple are challenger institutions. So these institutions either are challenging within themselves to say, hey, you know what, our old business model doesn't work and we need to cannibalize our new business model by giving Mark these new services, or these are challenger institutions in themselves who are looking to upset the status quo. So we don't have a B2C customer base. What we have is a B2B customer base, and these institutions then use our technology to essentially go out there and be able to deliver services to the individuals. So to the individual, it's a very easy one. To businesses, so now we are seeing an uptick in terms of SMEs as well, or e-commerce players for that matter. And what they see is a huge saving in working capital, because to a business, for example, if Mark Inc. is a business and you are invoicing your buyers on 30-day terms, and though they were to send money to you on 30 days, you get money on the 33rd day. So you have 10% of your working capital just tied in because it takes 3 days for you to receive the money. But now that you're able to receive money instantly, suddenly there is a 10% decrease in your total working capital requirement. And when we explain this to the central bank to essentially say, hey, just by increasing the velocity of money, exactly what they're trying to do in the domestic payment system, we are able to do it in a cross-border payment system. And you are able to get a higher growth rate because we are able to turn around money much more faster. Exactly. Think of money as inventory, and then you are churning into more cycles. And hence you are able to get a better GDP output or a better growth rate. They love it, right? And the other part that they love is that we work only with regulated financial institutions, because one thing central banks worry about is unregulated, unscrupulous actors essentially getting into the space which they are not able to manage. But once we are working with banks or PSPs who are already regulated by the central bank, they have already seen 10, 20, 30 years of performance and behavior from them, then they feel totally comfortable, because then they say, even if it's a new technology, what we are doing is we are empowering existing players to become better. And then, of course, the benefits to be passed on to the citizens or to the corporates whom the central banks serve anyway.
Okay, yeah. So Ebi, is that indeed something that's important to Uber, that speed in transaction processing, or is there other technology that's driving your business?
So, I mean, I think one that I think is important to highlight and is looking at it from the other side, but it just gives you a sense of when technology works and works well, what it can unlock. So you think about the typical earner. Most earners on the platform are very sort of, day by day living, so to speak. I've sat across from earners on the platform who say, literally, I earn money in the morning. I take that money, I cash it out, and we're getting to that in a second. I go into the rental, I pay for the car, I then drive a little bit more to earn money for the petrol. I go and pay for the car again. And if your system goes down in the middle of that, I'm not able to drive for the rest of the day because I'm literally living, trying to sort of rent the car that I don't own yet. And at some point, they basically earn enough, and then they actually go put a down payment down and earn a car. So we've seen people really who are not necessarily, sort of have struggled with employment, and they use this as a way to sort of bring themselves back up. And all of this is possible because in around 2015, we had this idea to allow drivers on the platform who, you push a button, you get work. You're essentially on demand. It's on demand work, but you weren't able to get your money on demand. We used to transfer it in a lump sum every week to your bank via FTP files. Fast forward today, now a lot of banks offer faster payments, real-time RTP, etc. But then what we did is we actually leveraged Visa Direct and MasterCard Send. And so we would say to the driver, if you have a debit account, add your card on the platform and we'll get your money to you instantly. And this was magical. More than 70% of drivers will disperse their money in the US, 70%, via on-demand payments. It lets them go buy groceries. It lets them figure out buying petrol. It lets them pay for a flat tire. And this is just technology really coming into where that human rubber to road connect, right? Fast forward, like I said, to today, we've now been able to unlock on-demand payments to more than 50% of the driver population. And the reason we're able to do that is in India, you have UPI, fast rails. In the US, we're working with partners to do real-time payments. In LATAM, lots of markets, real-time payments. And from our perspective, we've been able in a lot of places just to do one integration, going back to the story I was talking about, with our banking partner. And we sort of integrate one time into Citi, and Citi basically does all these disbursements using that technology. So this is just an example of something I've seen that, firsthand, when we've seen drivers say to us in markets, I prefer cash. It's because I want money in my pocket at the end of that trip. And now you have money in your pocket. So just imagine what you could do with that if you extend that even further. I mean, licensing aside, I'd imagine a world where that cash out could go to something like TransferWise. We heard that earlier. And I could just send money to my family immediately. I could literally go drive and send money from the request that I got if I'm, we have a very large immigrant population around the world. So that just gives you an idea of something I've seen that really unlocks technology. But the other side I've seen is us also having to innovate to sort of, if you like, bridge or cross the chasm that we see today around the world. So I talked earlier about payments acceptance. The average payment method for us takes quite a bit of time to integrate, different APIs, different SDKs, different payment providers, different flows. So what we've done is actually built an API. We've essentially standardized those verbs, charge, auth, capture, etc. We've gone to the players and said, you integrate with us. And we've worked with a bunch of partners, around the world, in LATAM, eBanks, in Europe, Adyen, and we've been able to unlock 100 payment methods this year alone. So I'm just going to end with that. 100 payment methods globally, from Sub-Saharan Africa to LATAM to the EU.
Incredible, incredible. I guess some of the challenge and the reasoning for some of the local flavors lies in our last angle of today for the topic, and that's regulation. So, Paul, we've heard that the Central Bank of Hungary is trying to maintain that balance between security and resilience. We see Uber having troubles with actually having all these different local flavors. You're an international company. How do you have that? What kind of conversation do you have with the local regulators, and how would you like to be supervised? Would you like to have a global supervision? How would you see that element going?
First of all, I think that kudos to the Central Bank of Hungary, who have really run a process that has been predictable for everyone being a part of it. And I think that's one of the real big success factors, because if you take a step back, what you really want to do by introducing instant payments is actually you want to change the behavior of how you pay and get paid. And that is sort of at the essence of it. And if you want to change behavior, that can only be done through sort of tapping into the culture in that country. So culture needs the regulatory oversight to be able to change the behavior of that country of taking those elements and using them. And in order for that to happen, you need innovation. What do you need in order for innovation to happen? Well, you need standards that you can base it on. You need to have the APIs. You need to have the ISO 20022. You need to have all of these elements in place that will actually be driving both the change in consumer behavior and how you deliver these services, but also the innovation that you need in collaborating on delivering these services together. So in essence, I would say the way that I think is a good regulatory oversight is to ensure that you understand the risks involved in the infrastructure that are there, but you ensure that people take responsibilities for the outcomes that are sort of exposing the risks of an infrastructure. And I think Hungary has been a front runner in doing this in order to place a very clear mandate on banks, on participants who want to take part as third parties in the ecosystem. And that's really the key to unlocking all of this potential. Then they can regulate to get the desired behavior and the change where you actually have uptake of transforming cash into instant payments. And you also have innovation that is taking place because you're basing it on standards. And our product that we've developed and delivered to in Hungary, that's been the basis for us all along, to ensure that we use standards that can be applied in Hungary, and then it can subsequently be applied in other countries, and other elements of that will follow that same path. So, I think regulation is needed, and the way it has been done in Hungary is really something to be looked carefully at, because it worked, it was predictable, and you see where we are today. The uptake is phenomenal, and it's being used to great extent. So,
super. Well, big praise for the Central Bank of Hungary there. Navin, I can understand that you have got some different experiences with talking to regulators and central banks, being a cryptocurrency and having that interesting angle to it. I think we've got about 4 minutes left, so I'll try to fit in 2 more questions. So, Navin, would you like to quickly elaborate a bit on your experiences with regulators and the conversation that you're having?
Absolutely. So I think CBDC is a good discussion because it is driving the regulator deepening its understanding about digital assets, right? So, and it doesn't matter it's XRP or Bitcoin or Ethereum or a central bank issued digital currency. The topic is right on the radar where the central bank needs to respond to it, right? So I think what this is creating is a place for education, place for all the stakeholders to come together and then say, hey, you know what, let's let innovation flourish, right? And within that, because we are working with regulated financial institutions, so for example, when we approach a central bank, we approach it along with the financial institution that they already regulate. The discussion becomes very easy because then what we are saying is, hey, either in a sandbox, if they have one, or in a limited capacity, let the remittance business or the proposition flourish, and then let the results prove itself. And our last message is, don't regulate the technology, but regulate the use case. So if you look at internet, email is totally valid, but selling drugs on the internet, of course, needs to be banned. So use cases or activities is where the regulation needs to come in. But if you regulate the technology, then a lot of good use cases like ours will essentially get banished. And central banks are very smart people, so they get it. And then we have had a very positive experience working with them.
Thank you. Lajos, do you have any final comments on that?
Thank you for the praise from Paul and Navin. It was music for my ears to listen what you are saying. So really, I think that it's a responsibility for the central banks to follow what is happening on the market. And if we see any market failures, then we have to interrupt and we have to do something. And this is what we are doing in Hungary, that we try to follow. And since we are central bankers, we don't have the profit pressure on us. Therefore, we can look for 10 years or 20 years. We can have vision how to develop a system in a country or in a region, like in Europe. And then we can have proposals for doing this. I understand the market, that they are running for profit, so they can just think for 2, 3, 4, 5 years, and they are happy if they can survive. So therefore, there is a discrepancy between the approach of the central banks or the regulators and the market players. So I think that a good central banker always tries to keep the hand on the market and to follow it and try to help the market to develop.
Well, super. Apparently, you're doing a very, very good job as Paul and Navin talking about it.
I want to end with the note of people assuming that Uber's anti-regulation, or, I think we've had a fantastic relationship with the Dutch National Bank, and the EU is a very good model of how you can sort of come together, build once, and get it to work the same everywhere. I just hope that more countries and more regions look to the EU for what's worked and sort of take that model.
Collaboration is the key, as always. So that's great. The future is so bright. We better wear shades and collaborate.
Well, those are some perfect closing words. So I would like to thank all the panelists for joining us. I guess we have enough content for another 40 minutes, but unfortunately our time is up. So thank everybody. I'll hand back to the speakers.
Thank you, Mark.
Thank you, Mark, and all the members of the panel. That was indeed an informative discussion, and we did hear many fascinating aspects and opportunities, developments and experience of what's to come in payment infrastructure in the 21st century.